The Williams Alligator indicator is massively popular on YouTube and the internet, but does it merit that interest? Well, we're going to find out. I'm going to take you through what the indicator is, answer all those questions for you, and give you some strategy ideas to deploy for yourself while testing it out and seeing what sort of stats we get. So with that, let's have a look at the analysis. So the Alligator indicator was designed by a guy called Bill Williams, who was also the architect of the Awesome Oscillator. And if you want to learn about the Awesome Oscillator, put a link to that at the end of this video. But what is the Alligator indicator? It's a simple technical analysis tool used to identify trends and turning points in those trends. And his assumption is that the market trends for about 30% of the time, which is pretty spot on. So it's really about capturing that moment when it moves into that 30%. And the setup is used very popularly, like I mentioned, on YouTube and internet as a way of getting in and out of trades and creating a whole strategy system. And it's that we're going to also dive into in this video. So you're wondering, what the heck does this indicator have to do with alligators? Well, you're just about to find out. It's all down to the construction, built on 3 moving averages. I call them the fast, medium and slow. And the slow one, normally coloured blue, is called the jaw. The medium, normally coloured red, is the teeth. And the fast one is green and the lips. Those colours you can change though to suit yourselves, but that's what they normally are displayed as. So they are parts of the alligator, and we're going to see how they are used. But first, a bit of math, and it's the inputs, and these are the default inputs that you'll find that Williams put into the indicator. Now the jaw, that's the longer term one, that's a 13 period median price moving average shifted 8 bars forward. Then the teeth, which is 8 and 5, and then the lips, which is 5 and 3. So what are basic trading rules, assumptions of the indicator? Well, firstly, if the moving averages, that's MAVs there, are close or intertwined, then there's no trend. And if the jaw and teeth are in the same direction and the lips pass through these previous 2, then that is a trend formation and time to trade. And then if the jaw, teeth and lips are all in parallel, then the market is trading. But what does that mean in alligator speak? So this will help you visualize the strategy. So remember the first rule there, no trend. That means the alligator's sleeping, but the longer that sleep, the hungrier the alligator becomes, and after it wakes, the hungrier it is and the more that market is going to move. And then rules number 2 and 3, when the alligator wakes up, what's it going to do? Well, it's going to open its mouth and yawn and be very hungry, and it wants to start eating those bulls and bears. And that's when we start seeing those trends taking place. And after all that gouging and eating on those trends, then it's going to get tired, go back to sleep, and the market has gone back ranging and sideways. So there's a little visualization for you how we interpret the alligator into the indicator. And a little tip to get us going, remember rule number 2 about it crossing through the other 2. Well, to me that is too slow. So what I do is I use the lips crossing the teeth, otherwise I find you miss a lot of the trend. So important tip there. And how do we get out of the trade? Well, the traditional exit is when the price closes through those lips. So with all of that lot, we've got a bit of background now. Let's see how we can put this onto our charts. Right, so into the charts, and before you I've got the S&P 500 E-mini futures, very popular day trading long term market, ticker ES1, and the time frame set to an hour. Don't worry about the time frames at the moment, irrelevant. It's just to show you how the indicator is applied. And how do we do that? We go up to the top, go to indicators. This is TradingView, by the way. I'm sure it's similar in many of your different charting accounts. All we need to do, type in alligator, up it comes. Williams Alligator is the one we want. We click on it, it'll put it on, and there you go, there's the indicator itself. So let's now just look at those inputs, right click on it, then settings, and you can see all that terminology we've been using: jaw, teeth, lips. So the jaw being the blue line there, and we've got the red line being the teeth, and we've got the green line, that short term one, being the lips. And inputs all default, and I would play around with this some, especially to optimize trading strategy. The defaults are useful, and that's what we'll be testing on here, but have a play around, especially if you've got a back testing optimizing type tool. You could come up with some better strategies. So let's take a look at a typical example then, and we've got one, really easy one down here in this zone right here. You can see the blue and the red lines above each other. That's the downtrend, and we've got the green, the fast one, the lips, moving on through. It's moved through the first one, the red line, the medium one, and then finally gets through the blue line, the slower trend, and that is our entry point there. As you can see, then it races on up, and remember the close, the initial close is when it crosses and closes back through, which is there. So on this example, this isn't a great one actually, because by the time you get in, you're around here, and you're going to get out maybe at best break even. So this is, I think, the weakness of the strategy itself. You're going to get in too late, and quite often you get these moves and you get taken out either at nothing or a loss. And remember that tip I said, if you use the green crossing the red, which gives you a faster entry, that would have maybe got you in somewhere around here. So you would have made a little bit by doing that, not a lot, but a little bit. But it's a shame that you got taken out here. Was just have a look at how that price and the trend rallied on upwards. So like I said, that is a typical example, and we're going to try and take it to the next step and explore the data, the results behind it, and see if there's any strategies, markets, time frames that we can get this alligator indicator to work on. So to save you guys all the bother, I went away and tested the basic strategy on its own, and really it only produces a 30 to 35% win ratio. So trade management crucial, that risk return that you're putting on the trade crucial for the success in this in the long term. It only wins 3 times out of 7. You've got to have a good risk return number to put the trade on to start with, and that got me thinking, well, what's wrong with it? And I think it's the false signals and the lack of a trend identifier. So my immediate thought was that the ADX could be a good qualifier to help us determine a trend, or secondly, you could maybe have a longer term moving average. I've got a 200 one here. You could say if it's above, you only take bullish signals and below bearish ones, but that does make you miss out as well on a lot of trades. So I wanted to add in the ADX indicator, but also wanted a strategy tester that will allow me to put some numbers around it. And I found this one called here, ADX plus alligator. If you type that into the indicator at the top, you'll be able to find it. And what that then allows you to do is actually create a strategy and get some results around the performance of this trade idea. So now at the bottom you can see the results in its raw form, and it actually in this time frame doesn't seem to work very well. That's the P&L line going absolutely nowhere, and we'll just check the inputs here. That's with the ADX crossing the 20 line. Properties, got $10,000 in here, and it's going to take 3% of the equity for every trade. And we've got trailing stop. Got to play around with the sort of inputs here to really optimize what you've got if you want to make it a winning strategy. And sometimes overfitting is dangerous, but what I would try and do is play around, move the numbers about. Unfortunately, it's going to be a manual process because it's not one of these automated optimizers. Then play around with the inputs and see if that works on different time frames and different markets. If you get consistency across those variables, then you're more likely onto a better thing than rather than just fitting the numbers to work around one, say, time frame or market. And if we just did some of that research now, and we went maybe up to the 4-hour one. Does that help? Well, yeah, that's improved it a little bit, and really the return is not a lot. 50% profitable. Drawdown's very small, so nothing too much to worry about. But on $10,000, we can see the list of trades here in TradingView, and that's taken us back to April 2020. So you don't get many trades in that setup for the return. $20 over 2 years, not great. And play around, see what you can come up with. So I suppose the plus takeaway point from here is that by adding on an indicator, we've actually improved the return somewhat by the win rate of the strategy. We've taken it from 30-35%. Well, in this time frame, well, it hasn't improved it that much. We're getting into the high 30s, but if you notice some of those other time frames, it becomes more 50-60%, which makes it an easier trade to deploy. So it really is a case of playing around the indicators to try and get this to work. So I think on its own, it's just, I don't think, good enough at 30-35% win ratio. The risk management, trade management of this is so hard to deploy that it's very risky. So maybe instead of using the exit of going into the green, maybe a percentage move might be better. With the stop loss maybe above, if we said, like in this example, we could put the stop loss above that high there for the move downwards. But again, even in this one here, you can see with the rules it crossed here, you're getting in too late. So we need to enhance this entry criteria, and that might be by changing around the moving average lengths, that sort of thing. So again, if you go on to TradingView, there are a lot of other indicators around and strategies that people have created for the alligator indicator. So if we just typed in alligator again, you can see all these different ideas from different people. So maybe have a play with them. They're going to pull back some stats for you down the bottom. Might be the easy way in if you want to use the alligator indicator. I found one that was quite interesting. Let's just get rid of the one, and where is he? I think this was the guy. Now this one was just called Alligator. Why do I like this one? It's not because of the results, because as you can see, 29% win ratio. It really is the raw numbers monetized for you, but what it allows you to do is change these take profit and stop loss levels. So like I was saying about the different ideas of exiting an entry to the trade, the risk management, which should be crucial for that low win ratio, then that one, the alligator there, could be very good for you. Now let's just add on the ADX so we can actually see what we mean by those trending situations. And you can see here in the middle the ADX added on, and the filter it's creating around there is what we're saying when it gets above the 20 line, say, which is roughly here, then we're interested in those signals. We're saying under 20, there is no trend. But again, this is probably going to get you in a bit late, so needs some further tweaking, or it will get rid of a lot of signals, which helps us with those false ones, but it also takes away a lot of the good ones. So what I've seen, again, if you want to play around, type in alligator. There are other strategies you could test. People have added RSIs, fractals, other trend filters, a whole load of different alligator based strategies for you to play around with there on TradingView if you are interested in that. For me, maybe I would add something like well, let's play around now. Let's change the settings, let's get rid of the ADX, and maybe DMI, as a sort of a crossing point. If it's red above the green, it's bearish, and vice versa. And when they cross, we marry that in maybe with the signal, and we stay with that, get out when it crosses back there instead. So let me just recap that one very quickly. We would look maybe to go in with the setup as we have, and we don't use this part for the trade management. We're going to get out maybe on the cross there, so we actually get in maybe a bit better there. That's just a rough idea for something for you to think about. That is a good trend filter. You can again change the settings back a long way to make that more trend based. Let's just play around. Let's maybe change the length to 100, and you can then see where you could say all the bearish signals in between that setup there. So some ideas for you. So let's just summarize what we've gone through on the charts. So in summary, the alligator indicator is a tricky one to get to work with, only a 30-35% win ratio, and I've seen that across time frames and markets. I think it needs a trade filter to increase your chances of winning. Such indicators as the ADX, DMI, long-term moving average, or even try some of those strategies that people have kindly put onto the TradingView charting package. Remember that warning I said, don't backfit just to get a time frame and particular market to work. And I really do think that trade management is crucial for the success of this strategy. So what markets can you use to trade this in? Well, this is my own opinion. I think it better suits the obvious trenders from the historical ones like cryptos, commodities, stocks that are known for good big long-term trends and moves. FX is a lot more inconsistent with its trends. A lot of those pairs are tricky to trade, so you can maybe something like CAD JPY or the Australian dollar might be a better bet. But if you're into the standard majors, then you're going to have to think of the time frames a lot more. And my final point there is that trade management, the old exit rules are going to give you too much choppiness. Maybe think of different approaches, maybe using percentage moves like 1.5% return to 1% risk, or another indicator to get out of the trade. Well, there you go. That's the alligator indicator. It's an interesting one. It does have potential, could work, but you're going to have to put some effort into getting it to work. And like I say, statistics I think are the important part here, knowing what they are before deploying this strategy. Now, Bill Williams also created another indicator called the Awesome Oscillator, which I've also done a video on, and you can watch this here now.